Investors are breathing a sigh of relief as more moderate inflation and cooling energy are lowering odds for rate hikes. Markets rally again, driven by a perfect mix of cooling inflation data, sliding energy costs, and relentless AI optimism. Let's quickly recap the week. It was short with Monday a holiday, but Tuesday rose as confidence beat expectations and investors eyed an imminent US-Iran peace deal. Wednesday was essentially flat, but oil plunged on reports that the Strait of Hormuz could be reopened within a month of a deal. Thursday rallied again after April PCE inflation came in lower than expected, and finally Friday capped a green week with more peace deal speculation heading into the weekend. So what's the deal? Well, on the US-Iran front, investors essentially see the conflict as over. They don't expect the US to have any appetite left to extend it and will concede multiple concessions to get out of it. This is helping to ease the burden on consumers. Oil futures tumbled this week, and even gas is finally starting to slide as well. In addition, inflation may not be as bad as feared. PCE came in lower than expected for April. It offset rising rate hike fears following hotter CPI and PPI data earlier in the month. This is something, though, to watch going forward. Meanwhile, the AI buildout continues to smash records. Is a bubble potentially growing? Likely. However, as long as hyperscalers keep writing checks, we expect infrastructure names to keep rallying, at least near term. So what now? Well, next week, the focus will be on labor markets. It's jobs week, culminating with the May jobs report on Friday. Investors are looking for labor markets to stay healthy, but wouldn't say no to a little more weakness to keep rate hikes more at bay. We'll have follow-up updates next week. Stay tuned.